Welcome, everybody, to the Chinchilla Pickin' Podcast. It is July the 14th, 2024, 4:11 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm joined by the one and only, the Baron of Bonds himself, the backbone of the show, Brandon Beaver.
I like that you finally recognize that.
You are. I will publicly acknowledge at any given day and time. You are the backbone of this show.
I'm also I,
100%.
I'm also technically the producer of the show. I do the edit.
Yes, you are. So if you need a producer for a show, anyone listening right now and you're thinking of doing a show and you need a producer, Brandon doesn't charge too much. It's about what 150 an hour is what I
Exactly.
have to pay you, somewhere around there. 150 an hour. That's what I pay him, but he does an amazing job. So amazing job. Just don't have him be on time. Don't expect that. That's 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 an inside joke between him and I. Uh no, we missed last week. Sorry guys, that is my fault. I was having some issues from my arm and shoulder and yeah, took some medication and knocked me out and I slept through the time. And Brandon has a tight schedule, so we missed and I apologize for that. That's my bad. I did try to record a smaller version of the show Monday, but I was having trouble logging in. Again, I am not very IT smart, not a smart IT gentleman. I don't know how to do IT stuff.
and I forget
I just know how to buy and sell stocks. I don't know how to IT things.
and I forget all of my passwords.
Yeah, you don't keep track of your passwords. What's with that?
The thing is it's auto login all the time. I don't have to. I mean,
But you,
before that, I forgot them anyways.
I still keep track of my passwords. I have a log. I'm not going to say where on the show or but I have a log. I keep track of my passwords. And if
Yeah,
I
but
change my passwords, I change it in the log.
there's different requirements for different apps, and so you got to have like a special character or at least two like
Yeah.
capitalized letters and couple numbers and
Yes.
three backflips and a cartwheel.
Yes. In my log, I have I have currently 75 different passwords for 75 different logins.
That's ridiculous. I don't like
That's
this new
that's
world, Dave.
that's reality, buddy. It's reality.
Ugh. Let's
Right?
get right into
Anyways.
the news of the week because you were going to talk about it, and
Oh, you want to get to that for okay.
it's on everybody's mind.
Well, we always go into like Brandon leads off the show, but if we want to go there first, we can go there first because that's not going to take too long. There's just a real little quick bit on that, but we could get into that right away. Let me give the rules for the listeners. If you're new to the show, rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You hear it live back and forth right here on the show for you. The bicker and banner is real. We just don't like each other, and we get together for the show. So, no, seriously, what we're going to talk about was some of the news that happened over the weekend. Everybody's talking about what happened with the presidential candidate. We're not going to talk about that, right? But I have to mention it so you understand what we are going to talk about, which is the stock and investment side. So, because of what happened, the unfortunate events that happened over the weekend, what you have is certain stocks and certain commodities moving in a certain way. I mentioned this in Brandon and I's group chat immediately that evening that I immediately saw a 2.5% jump in Bitcoin immediately. As soon as it got announced, not 1 minute later, Bitcoin spiked up 2.5%. Since then, it's continued to go up. Bitcoin pre-event was at 56, 57,000, if that, and now it's over 60,000 a coin in just one day, 24 hours a period of trading. Brandon, look like you want to say something right now.
It's a slightly different subject. It's a derivative of the subject, so we'll wait.
Okay, we are going to go off in lots of different derivatives
Yeah.
because I mean, So Bitcoin going up has lots of ripple effects. I could go down a lot of roads, a lot of different ripple effects, and what happens because of this. But I'm going to go down just the ones that affect the listeners. Because if you're listening to me, there's certain things I've mentioned that hey, this would be a good investment to have. This will be something I've personally invested in, and this would be something I recommend for other people. And one of those things is Coney, CONY. Due to Bitcoin going up, what you've seen is Coinbase on come Monday morning should also start to move higher. If Coinbase moves higher due to Bitcoin going up and Bitcoin continues this throughout the week, you're going to see Coney turn positive on a couple of their options that they have expiring this Friday on 7/19, which means they're going to pay out a larger dividend come next month, which means the stock is going to go higher, right? So not only going to see a stock price increase, you're going to see a much higher dividend come next month, all because of the events of this weekend causing Bitcoin to go up. That's how these news events have ripple effects, right?
Right.
And so I always keep an eye on it for that. So I told Brandon I would talk about my one habit I have, one of my many habits is I wake up every day. One of the first things I do is I go through my phone and I read the big headlines of the day. I'll open up some news channels and Reuters and or whatever news source you go to. Just open it up because as long as it's it covers a broad base, it should be good enough. But go through the news headlines and start reading through them and read a few articles and get your bearings for the day of where everything is at because if you're a day trader, a swing trader, or you're invested in something that has high volatility, like I am with the ETF Coney, what you have to be aware of what's going on in the world because it can affect the markets and affect what you're invested in or what you're possibly looking to invest in that week. If you have an idea of like, say, ABC companies reporting on Thursday, but you're trying to get in on Tuesday, but then news comes out over the weekend. You need to know that so that it could change whether or not you invest. That's one habit I have that I recommend people pick up who are investors or day traders. Now, if you're just investing for long term and long term only, and that's your only type of investments, then it really doesn't matter.
Right.
unless there's some really big news like the company like if Facebook came out and said Mark Zuckerberg passed away, that would be huge news for Meta. But unless it's something like that, it really doesn't matter if you're invested for long term. But Brandon, go ahead.
What do you think the news is gonna? What kind of effect do you think it'll have on arms suppliers or gun makers like Smith and Wesson and Ruger?
I think they should go down, and here's why. The current candidate who we'll just who had the event happen to them, and now he's expected to win due to what happened. He's been highly against any wars having the U.S. involved in other countries.
But wars, but domestic gun sales.
Yeah, he's been a supporter of the Second Amendment, but I don't believe he's going to go in there and make any changes to any regulations on gun sales. I think he's just going to keep status quo.
No, but I think that Bitcoin might be kind of a part of the apocalypse trade, right? Like people get afraid of the end of the world or a civil war or some sort of revolution. And what do they do? They go out they buy gold, they buy guns, and they buy Bitcoin. And
See,
so
I think, yeah, go ahead. Sorry.
so I wonder, and I don't know if it's going to have that much of an effect on sales, but I wonder it'll be interesting on Monday morning to see what happens to the stocks of companies like Ruger and Smith and Wesson.
So yeah, and I think you've got the wrong kind of trade on Bitcoin. I think initially that could have been the thought process with Bitcoin, initially the day of, but I what I believe is, and I could be wrong on this, is that the candidate is just a supporter of cryptocurrencies and that they're not going to have any tight regulations, no SEC regulations. He's a supporter of people using alternative payment sources and alternative ways, open market, free market capitalization. He's a supporter of that, and that is why Bitcoin is will do well underneath
Okay.
uh,
Okay.
that administration.
Gotcha. That makes sense.
And it's not the apocalypse to war trade. He's in favor of that. He's in favor
Right.
of the openness of it.
Right. Right. I do. I don't know. I do. I'm just gonna say it real quick. Last night we had a situation where I think that we figured out this is a wake up call, and guys, we got to come together. We get. I can respect somebody, right, as a person, and not respect their political views. I can
Yeah.
still get along with them. I can respect their right to have a political view. I can love or even like somebody from a different perspective politically, no matter what. Like, I don't have to respect their political views, but as a person, I can respect them. And I think last night we had a situation where we have to think about this. Like, man, dude, we're going down the wrong route. We really are. We're
Yeah.
going down the wrong route with the hateful rhetoric against each other. I go to work with these people that disagree with me. I have friends and family that disagree with me. Let's all calm down a little bit. Let's just bring it down a couple notches. Okay.
Right. And I like where you're going, and I agree with your sentiment. Majority of the people I actually help to get to a better place financially and financial security actually are complete opposite sides
Yeah.
of political leanings as me. But you know what we both agree on? We both agree on trying to take care of our families better. We both agree on trying to help each other financially. We both agree on, that the stock market and investing is a great way to do it, and it provides that independence because I have, there's just one. I'll just bring up this one individual. Um, I've been working with him now for a couple of years, and he's come up to me and he says, "You know what, dude?" He says, "Thank you." This was just this past week. "Thank you because I know I'm close to possibly losing my job, but I'm not concerned and I'm not worried anymore, and I know how I'm going to get from one day to the next if I do lose it tomorrow. And
Yeah.
it's because of you. You've given me an income outside of work, and I want to say thank you for that. It's given him the freedom uh, to uh, to not be hamstringed by a job or a corporation that he sees a light at the end of the tunnel.
Yeah.
And so even though he disagrees with me politically, we both agree that, we can help each other. We can help each other become financially free and away from all this other stuff due to the investing.
He's got the FU money.
Yeah, well, got it for him. It
Yeah.
is
It,
for me.
it's a
It's not
nice,
enough.
it's a cushion. Yeah. Yeah.
Right? Let's just put it
Right.
that way.
Right.
So, um, but yeah, so there's lots of ways you could take these macroeconomic news events is that's what we call them. If you don't know, macroeconomic is news of the day, events of the day that have emotional moves on the markets. Microeconomics are fundamentals, numbers. I know that's Brandon's specialty. Brandon is definitely the microeconomics of this podcast, and I am definitely the macroeconomics of this podcast. Right down the middle. And that's the difference. So the macroeconomic news of yesterday is affecting markets, and it's going to affect markets come Monday morning. There's lots of news stories on it. If you look as far as stock news, business news, there's stock and business news stories on it. If you just start looking anywhere, it's affecting different stocks in different ways.
Yep.
But Brandon, I want to switch gears here, and I want you to talk about farming for me, if you can, please, and talk about the state of American farming, and where you see us going and what's going on right now.
It's not good right now. So the U.S. Department of Agriculture forecasts 2024 net income to come in at $116 billion. This is down from $156 billion in 2023 and a record $186 billion in 2022. Adjusted for inflation, the 2024 forecast is 4% below the 20-year average and down 41% from 2022. This is the largest 2-year cycle decline in net farm income by percentage since 1983. Net farm income of 116 billion in 2024 represents a 27% decline from the inflation adjusted 2023 total and the largest annual decline since 2006.
Man,
Not a
that's got to hurt the farmers, right?
Yeah, it is. And it's been since 2020. The 48% of net farm income in 2020 during COVID came from the government. And they had a pretty large spike there, 2020 and 2021. Inflation was a large percentage of that. So, we can't look at this and say that the farmers were really, making a ton of profit either, because their costs and expenses are so high already on farm machinery and equipment. So the profit wasn't a record, the income was, but that's mostly because of inflation and how much money they were bringing in revenue wise, only because of inflation. Go ahead, Dave.
So I believe that the U.S. federal government, correct me if I'm wrong, has substantial subsidies ready and in place in case of farmers going under, that started in the late 70s due to stagflation at that time. And in the early 80s, we had lots of concerts called Farm Aid that went around starting to raise money because we realized that this is an issue in times of high inflation. Farmers can't keep up. And the federal government created a subsidy of some sort. I forget what it was, or a back-end, if you will, a backstop of some sort to help farmers.
Yeah, but what's that? That's a double-edged sword, right? We're dealing with
Yeah, it
inflation and
creates
trying to
moral
keep
hazard. We
inflation.
could go
Yeah.
down that road too.
Yeah, but and it's the double-edged sword of let's get inflation down to 2%. You can't really be passing out stimulus checks when you're trying to do that either.
Yeah, yeah, yeah. All right, yeah. That's a different topic. I don't want to go on that topic right now.
Mhm.
But yes, we do need to watch our spending so that we don't raise inflation. There's all kinds of adverse effects for every decision that they make. I don't want to get down to criticizing the governmental decisions, but what I was trying to point out was you mentioned that the government subsidies had helped a little bit for these farmers to get through this tough time.
Right.
It's been around though since the late 70s, and that's when it was instituted, if I believe is what I was going for. That's when we started beginning subsidizing during times of high inflation that was hurting farmers because farmers can't keep up in times of high inflation. And based off the numbers you're given, this all started after COVID. So that was thus due to high inflation. So this is something we should have seen coming.
Yeah, we've been subsidizing corn since the 1970s, which is part of the reason why we're off fat. But I mean, seriously, it is. It's why meat is cheaper at McDonald's and fast food restaurants, and processed meat is cheaper at the stores than, the healthy stuff like the fruits and vegetables, because the high fructose corn syrup or whatever it is, that's all in that, in the feed, they feed the cows with, all of it subsidized. But it's a whole different subject.
That
So
is, and we all do need to eat healthier.
yeah.
As a group, especially myself, I've struggled with my weight and my weight loss. I've been public about it on this podcast even, but let's get focused on news. So as far as stocks go, you mentioned a certain I want to let you bring the
I
company
I
up.
want to I
A
want to
certain
get
company that's
so
hurting.
so excluding government payments, total inflation adjusted net farm income in 2020 was the lowest since 2022. So even though you had 48% of the dollars coming in, of course, revenue from, people like me and you was down because of COVID. The economy was shut down, so it makes sense. Um, we do have a presidential candidate right now that is in favor of higher tariffs still than what have already been passed. So former President Donald Trump has pledged to enforce steep tariffs on Chinese goods if elected. This should actually be a benefit to farmers, not so much benefit to the regular everyday consumer like you and me, but to farmers. So we can maybe start to look for a little bit turnaround here. The farming industry will rebound. I think that a good stock to buy in anticipation of a rebound is John Deere. And I'm always a fan of buying stocks when we're in the mess of it, right? When we're at the bottom of it, because when people start sniffing out the rebounds, then they start piling into the stocks and they overbuy it. And it can happen pretty quick. So John Deere's net profit margin is still staying around 16%. That's pretty good. Gross profit margins right around exactly where I want it to be at 40%. It's at 39.61% to be exact. Debt to equity ratio as of April 30th, 2024, stands at 1.81. So they're a little bit, I would say, like in the middle, like as far as leverage goes, but that's normal for a farm equipment manufacturer. So I'm not too concerned about it. At the same time, their long-term debt's approximately 40.96 billion. That's about a 15% increase year over year. So I kind of want to see that, start to come down a little bit. But they do have a good prudent management, historically at least, of debt, and they focus on free cash flow. And this allows for share repurchases, which we all love as shareholders. Usually, we don't want it to be overdone, but and the depth levels I see is relatively stable here. Annual earnings per share in 2023, the annual EPS was $34.63. That was a 48% increase from 2022, despite the decrease that I just went over that has happened every year since COVID and net farm income. In 2023, a 48.75 increase in earnings per share. So that tells me that they're managing their company pretty well. 2022 annual earnings per share was $23.28. That was a 22% increase from 2021. But their earnings are starting to come in, and for this year is not looking so good. It does look like the fact that farming has been hit pretty hard this year is starting to hit their balance sheet. As of April 30th, 2024, for that quarter, they reported an earnings per share of $8.53. That's an 11.61% decline year over year. So we're starting to see it hit the balance sheet. The share price has already dropped over, I think, at least over 10% here. So I think we're at a good time to buy this stock. Despite, they always say buy when there's blood in the streets, right?
Yeah, they do. And you buy low, you sell high. You buy when everybody else is selling. You sell when everybody else is buying. All these sayings that exist, they exist for a reason. I see what you're saying. I don't. I mean, I'm not a fan of all the numbers there. I see your point though. What makes you really believe that the farming industry is going to have a comeback? Because I see companies like the Bill Gates company out there buying up distressed farms, and they would love probably to see more distressed farms so they could buy even more. But I mean, what makes you think there's going to be a rebound here? And if there's any signs that you see a rebound, okay, then yeah, John Deere would be a great buy.
Well, the Gates company buying up the distressed farms is one of the signs that I see that we may be nearing a bottom. They'd be holding out if they didn't see it, right? They want to make money on the stuff they're buying too. So
Yeah,
yeah, so I mean that's one, and doing that will help provide a bottom at least in the real estate side of farming. Um, the average Wall Street analyst, I just want to say this real quick for John Deere, starting in 2025, they forecast 32% annual earnings growth for 5 years, every year for 5 years after that. So if that's true, and the annual the analysts are often wrong, but if they're anywhere near being right here, buying this at a price to earnings ratio of 11, if you're looking at a 32% year over year growth for every year for 5 years starting in 2025, you're getting a pretty good deal.
yeah, that is a good deal. I like 11. 11's a good sound number.
Yep.
But that, I mean, that's just again, I want to preface by saying the P ratio is just one tool. You got to look at
It
many
is.
tools to get the big picture.
It is.
Because
But here's why this is a helpful tool for John Deere. We see earnings for farming going down and down and down over the last 4 years, right? If earnings for John Deere was following that, and if the stock was following that as well, let me put it this way: if earnings were dropping faster than the stock was dropping, the price to earnings ratio would actually be going up. Does that make sense?
yes,
But because the stock has been falling with earnings, and in some cases faster than earnings, we have a decent ratio here.
so
The
it's
bottom.
oversold.
Yeah,
Yeah. Yeah. See, this is the time that I would look at a MACD and pull up those charts, and I would use a chart as a tool and kind of get an idea if it's been oversold.
right, right. But you can also look at the numbers too. You know, if I looked at the price to earnings ratio and saw a PE of 45, that would mean that the stock needs to drop further to catch up with the earnings and with the revenue drop.
Gotcha. Cool. So John Deere, call? Yes.
Yeah, I think it's a buy. I think you can add into it over the next 12 months, starting maybe next week.
Oh, start right away. I love
Yeah, I
it.
would. I
Who's
would.
this
Why
new
not?
Brandon? Who's
You know,
this new guy?
they say timing the market is not as good of a resource as time in the market, and it can be very if next week we start to get some semblance of a farmer's rebound, then people start piling into the companies that are at good values right now.
Yeah.
It could happen in 6 months. It could happen in next week. You really don't know.
Yep. All right. Cool. Nice. What do you have next, man?
I mean, that's really all I got. I did want to talk a little bit about what I look for in companies that I buy. Um, you would think that I would say the opposite that I'm about to say, given that we run a stocks podcast. But companies to me that are all about the money are misplaced in their judgment. Instead of being all about the money, you got to be all about the win. And I approach my investing that way too. It helps my mindset because on down days, I don't want to be panicking, right?
Yeah.
So it's sort of the same thing for me when I'm buying into stocks. I'm not really like all the money's a great thing and it comes as it comes with the wins, right? I'm about winning. I want to win. It's a game to
Right.
me. I want to win,
Hashtag winning.
right? Not about the money. It's about the win. I wouldn't have held through 30% declines on Meta 2.5 years ago, and then now more than tripled my money on it. If it was about the money, I would have panicked.
Yeah.
Companies that are about the money, they oftentimes they have bad cultures. They've got they've got politics being played, and it's just it can be a very very toxic place to work if it's about the money.
So you don't like my strategy currently, my new strategy of income driven ETFs where the fund managers have to pay out 90% of their profit each month to shareholders, and so they have to continually make profit each month.
So if it's helping you win, then I'm fine with it. It's just the greed aspect can be so toxic if people become greedy and then they start buying into meme stocks and GameStop and stuff like that, trying to be rich overnight rather than looking for the long-term W.
So you don't like Gordon Gecko saying greed is good.
I can't stand Gordon Gecko. I don't like him at all. In fact, most people that are on Wall Street probably I would not get along with.
Really?
I
If,
probably
if you're
wouldn't.
listening right now, just we have a lot of new listeners that are not as old as us. If you're listening right now, Gordon Gecko is a fictional character of the Wall Street movies. There's more than one. But yeah, yeah.
There's a lot of high energy idiots on Wall Street and it is all about the money in the next trade. They don't care who they screw over, but that's not how you win in the long term. That's not how you keep clients.
Yeah, if anyone listening right now, if you get a moment, there's a Robert Downey Jr. clip of him. It's like 2 minutes long, and they interviewed him about what he thought about his time at the Chicago Mercantile Exchange, I believe it was where he went, and what he thought of the individuals and the environment inside there. And it makes me laugh
I,
every time, but
for
watch it.
for a very short period of time, I worked for a company that at least on a weekly basis they would talk about their stock price. And I
Ugh.
would just think to myself, if you guys really believe that you have a long-term good strategy in place, who cares what
Your
your
stock price
stock
is going to
price
go
is
up eventually.
right
Yeah.
now? Right. What does it matter at this point in time if you have a long-term good plan in place that's going to get you there and you
Yeah.
believe in it?
Yep.
Focus on the wins. The money comes next to it. I
Right.
do if somebody's coming out and going out and making a purchase of another company, they're doing an acquisition that needs to be about the money, very obviously. There's, no way around that. But there's a lot of companies that are about, their share price every day. They have they have a long history of terrible turnover rates because instead of training the guy up to, that or the girl that may not be up to speed, they fire them
Yeah.
because they're not focused on the long term. That's my thought. I see it. I haven't really had a good way to put this into words, but this has been on my mind for probably a good decade.
Yeah, and maybe you need to write a book about it, man, to get it off
Yeah.
your mind.
Well,
But
here's the
Jack
other thing
Welch,
though. Let me just say
Jack
this.
Welch has winning. That's a good book.
Yeah, it is. It's I don't have that. I've never read it, so I shouldn't say it is because I don't know. But and I like Jack Welch. I need to probably read that book. But yeah, focus on the wins. And the thing is too, so many people try to use the I think the money is a good scorecard. It's a good way of keeping score, right? But if you've got a regular average employee that's on a salary and you're trying to motivate them either with a stock price or with revenue for the day, you're on the wrong path with them. What will motivate people is winning, right? So if you've got a good vision that you want this person to execute, and then you've got timelines, you motivate them to meet those timelines and to execute on the vision, then you're focusing on letting this person win at their job and being successful at that.
And if you need Brandon to come to your company and help change the culture, it is also a minimum of 150 an hour for him to come there and do it.
You know
Just that
what?
way.
I mean, I've never. I mean, this is technically a limited company here. This limited liability company here. You filed that, but I've never ran a company before. But I've studied them for a very, and so have you, Dave. For a very long time. This is what we do. We study these companies and we're trying to figure out who's going to win over the long term because we want them in our portfolios. And there's certain characteristics of leadership and CEOs that make it more um, likely that other company, that their companies are going to win.
Yep. So we're gonna transition over to what I want to talk about. Let's just say what it is. Right? Uh I got a couple of different headlines here, and I got one that's very interesting here, and I did not see this coming, especially since of all the back and forth and the fighting between world powers for the Pacific Island area, right? So there's been a battle in a lot of fronts for who has the biggest if you will impact in the Pacific and impact on Pacific countries and Pacific Island countries. But this headline just came out this today, 7:14 to 2:13 p.m. and the headline reads World Bank dollar lifeline for Pacific Islands proceeds with US and Australia push. So what is going on here, you may be asking. All right. Well, here's what's going to go on here. The World Bank is preparing a financial lifeline for Pacific Island nations backed by the US and Australia as an exodus of Western banks from the unprofitable market prompts concern that China could fill the vacuum in strategic region. Without a backstop, many of the 18 small countries and territories of the Pacific Islands, spanning 30 million square kilometers or 10 million square miles of ocean, risk being cut off from global finance as Western banks leave the less developed region. A situation an Australian official involved in the plan called Armageddon. So what's going on is banking curbs after the 2008 financial crisis have made Western lenders cautious about ties to the Pacific, where banks and regulators often lack the resources to find and prosecute financial crimes, raising the risk that banks get embroiled in embarrassing and expensive scandals. That's the main reason why a lot of these Western banks are not putting their money here in the region anymore, right? So what's happening due to that happening? What you're seeing is, hold on, I want to between 2011 and 2022, the region lost 60% of its correspondent banking relationships, where Western banks partner with local ones to enable transactions in international currencies. So banks like ANZ Bank, a big Australian bank, sold assets in Papua New Guinea. Westpac tried to sell its Pacific business, and Nauru's only lender, Australia's Bendigo Bank, announced plans to leave in 2025. So what's changing? What's making the U.S. and Australian banks come back to the table? Well, what is making them come back is the Bank of China opened an office in Papua New Guinea, signed a memorandum of understanding with Nauru, and seeing if they could step in. Vanuatu last week asked Bank of China to set up a branch. They asked Bank of China to set up a branch. Chinese banks have in recent years expressed interest in Solomon Islands, Tonga, Samoa. The central bankers of those countries told Reuters, although nothing has eventuated due to it. So China has come into countries before where Western banks have had pulled out due to not being unprofitable, and China usually comes in with very stringent, tough terms that are not made public and that can cause these third world countries to go ahead and collapse if they don't allow China unrestricted access to them. This is what we've seen in certain African countries, and they can't get out of the contracts they have with the Bank of China. Bank of China effectively has an economic control on these countries once they get in, and that's the problem. And so due to that, what they're doing now is U.S. and Australia were spurred to act against the festering problem in the past 2 years by planned exits by Bendigo and concern that China could step in. So a delegation of more than 20 U.S. Treasury and Federal Reserve officials flew in for a conference in Brisbane last week with Australia and Pacific Island officials. It was opened by a video message from Treasury Secretary Janet Yellen. So now, due to the U.S. and Australia seeing this action, they went in there. They said, "Hey, let's get this going here." The banks are agreeing to come back as long as the U.S. and Australia governments are willing to backstop if there is high volatility due to illegal activities happening and those scenarios coming through. So, Brandon, I know I just threw a lot of information at you. First thoughts, go ahead.
I mean, if China wants to take the risk, then let them. We had so many instances of that with U.S. banking already, especially in the 1990s. I mean, a lot of people probably don't remember that the Mexican banking collapsed in 1994, I think it was. And it was a very similar situation with banks like Goldman Sachs and stuff like that, charging higher rates. But the reason why they do that is because what you mentioned earlier. It's that two-edged sword. They don't have the regulations and the infrastructure in place to prosecute financial crimes. And so if people aren't paying back their debts, or if they're going back on their loans and stuff like that, then the people that are there, they're going to be out of luck. So they have to charge higher rates to justify that kind of risk. If China wants to come in and take the risk that Goldman Sachs and J.P. Morgan and such, and they don't want to take, then let them. It's going to be on them in the long run. We here in the United States, we've had situations like that happen to us that affected us negatively. So
China's going to come in and lose money for 10, 12 years because they have a 100-year strategy. And they're willing to lose money for 10 to 12 years in order to eventually take total control of the economic system of these small countries because they have a plan to grow in the Pacific.
Yeah, we can't sit here and rail against socialism and for government intervention, and then pretend like this 100-year strategy that's set up by, the same people that we rail against for making the wrong decisions, and we think that 100-year strategy is going to lead to anything good. Probably not.
Gotcha. Good point. That's a good point. I concede.
It's a 100-year strategy set up by central planners.
Gotcha. All right. Moving on to my next headline. I love this headline. It's kind of like a lightning round for Brandon because I just hit him with news and then he just responds. All right, this one's on CNBC. Headline reads JP Morgan's Jamie Dimon warns inflation and interest rates may stay higher. This came out on Friday at 7:49 a.m. So he's making this call and he's coming out here. Now we've known Jamie Dimon to come out and say things that were just not true in order to move markets so that he could buy it at cheaper. He's done that before. But on this one, here's what he's saying. This is a quote from Jamie Dimon. There has been some progress in bringing inflation down, but there are still multiple inflationary forces in front of us: large physical deficits, infrastructure needs, restructuring of trade, and a remilitarization of the world. Therefore, inflation and interest rates may stay higher than the market expects. So that was the quote from Jamie Dimon. Fed Chairman Jerome Powell earlier the week expressed concern that holding interest rates too high for too long could jeopardize economic growth, teasing that rate reductions could be on the horizon as long inflation continues to show progress. But Jamie Dimon is not the first one to go ahead and complain and sound the alarm on U.S. Deficits and U.S. spending. I reported about this. I'm going to say I reported like where I'm a reporter a few weeks back, saying that the World Bank at the last huge meeting they had, every single one consistently was saying the U.S. is spending more than what they need to. The U.S. is spending more than what they need to. Then 2 weeks back, saying actually no, I have my dates wrong. 4 or 5 weeks back, then 3 weeks back, I covered the same thing again. So now it's Jamie Dimon coming on and saying the same thing. Brandon, thoughts?
The two biggest things there are the deficits and the trade issues. And the trade issues aren't going away anytime soon, and neither are the deficits. Nobody in politics at all right now wants to lift tariffs. So the supply chain is going to remain broken, and inflation in that area is going to remain. Nobody in politics wants to quit spending on either side. Some
I mean,
people say,
I'm all for, look, if we spend, it's pay as you go.
yeah, me too, but
Do
nobody's going to do that.
pay
They
as you
might
go.
say they'll do it,
Pass
but
that.
they won't. They might say they'll do it, but they won't. We need a new contract with America.
New contract. I like that.
Yeah, I mean, this Newt Gingrich, but we probably shouldn't get too political. But
Yeah, right. Exactly. All right. All right. So next headline here. Google parent Alphabet is in advanced talks to buy cybersecurity startup Wiz for $23 billion. There's been multiple articles on this out this morning, lots of them across the board. You can find it everywhere. It's hitting the news wires everywhere. This particular article came out 1:22 p.m. Today. Let's go into it here and see the numbers and see what's going on. Google parent Alphabet's advanced talks to acquire cybersecurity startup Wiz for roughly $23 billion. Alphabet moves ahead with its bid to acquire Wiz, making it its biggest. This is Google's biggest acquisition ever, and a rare example of major technology company attempting a mega deal amid their heightened regulatory scrutiny of the sector under the current administration. In recent years, U.S. regulators have indicated growing aversion to large technology companies getting bigger through acquisitions. Here's a kicker, though. Wiz, which is headquartered in New York, has research and development facilities in Tel Aviv, and it generates about $350 million in revenue in 2023. Works with 40% of Fortune 100 companies, according to the website. The U.S.-Israeli startup raised $1 billion in private funding round that valued the four-year cloud cybersecurity company at $12 billion. Nobody at Alphabet or Wiz is currently responding to comments today.
well, it's a Sunday, so I mean they will Monday or Tuesday. I'm surprised. You know what? I didn't know that was the largest acquisition by Google.
Yes,
That
this will
surprises me.
be, if it goes through, this will be,
Okay,
yes.
it surprises me. It probably will go through.
What doesn't surprise
Okay.
me is more acquisitions of cybersecurity companies. I just don't see why. So I wanted to take this off on a little tangent, but first I want to talk about this. This is good for Google. They need to really shore up their cybersecurity section. I just don't. I see too many political risks for this deal to go through, not from the United States, because it's not going to make it a monopoly. There's too many other cybersecurity companies for this to make it a monopoly. Um, but from within Google itself, and due to where Wiz is based out of.
Jerusalem. Well, Israel.
Yeah.
Yeah. I mean, Israel's got. I mean, they've really put their feet into technology in the past like 10 years, and they've got some good companies coming out of Israel.
Yes.
And
Yes.
we've talked about a
I
couple
just
of them
don't
on the
see a
show.
lot of I don't see a lot of Google employees being happy with making this deal.
Maybe,
So,
but
but as far as cybersecurity, I see a lot of growth still in the sector. This is just part of more consolidation that I feel needs to happen among new startups for cybersecurity. But I don't see the growth I was expecting in CrowdStrike. I expected companies like CrowdStrike to grow faster what they are growing right now.
yeah, but we're still early in the game. And I
Are
think,
we though?
yeah, I think
I are we?
we are. And I think I think what kind of clouds that out makes us not recognize that as Nvidia's incredible stock growth and, the share growth over the past 2 years. But I think people have bought into that a little bit too quickly, as I've talked about in previous shows. We don't even know where the money's going to come from yet in artificial intelligence. We're starting to see signs of it.
But I mean, I'm talking about cybersecurity here.
Yes.
Cybersecurity's been around for decades. CrowdStrike's been around forever. With this whole race of AI and all these technology companies growing, the space race, everybody needs more and more and more cybersecurity. Walmart created its own division, hired like 10, 12,000 individuals just for cybersecurity alone. Um, I expected higher growth rate out of companies like CrowdStrike. I'm using them as an example, but the growth rate in cybersecurity companies has not been what I expected. In fact, and we covered this, I think, a year ago, that contracts went from being yearly contracts to yearly contracts down to every 3 months, 6 months, so on and so forth, smaller amounts.
Well, we probably haven't figured out which artificial intelligence language models are going to work best for them yet. But once we do, and the artificial intelligence starts working for them in ways that instead of fixing, threats after they've already come about, after they've already
Like
materialized,
AT&T.
right? And then now with this new artificial intelligence, supposedly what we're going to be able to do is block the threats before they even happen, because it'll be able to recognize what's going on before it actually materializes. And once we
Hmm.
get to that point, then artificial intelligence is going to be a huge boom for cybersecurity, I would think.
You would think so. It's all theory. I'm not buying any cybersecurity company right now. I expect more growth out of them, but I'm just not seeing it. So I'm very disappointed. So I'm not buying any, but they continue to be on my watch list.
Yeah, me too. CrowdStrike in particular is on the watch list. I haven't bought it, and I don't plan on buying it unless we get a dip.
Right. All right, so I want to end this show with what's coming up this week as far as earnings, because there's a lot of big companies here. I'm going to list off a bunch here in a row, and then I'm going to pause at two of them. On Monday, we got BlackRock and Goldman Sachs, big ones coming right out the gate, especially with Goldman Sachs criticizing the federal government over the weekend, saying, "Hey, you're asking us to put aside more cash, even though we passed your stress tests. Leave us alone." But their earnings are coming out Monday before the bell. Tuesday, you got before the bell, you got Bank of America, Morgan Stanley, PNC, Progressive, and State Street, all financial type companies coming out before the bell on Monday morning. After the bell on Monday morning, Fulton Financial, Hancock Whitney, Interactive Brokers, Pinnacle Financial Partners, more financial companies. But you also have a company that's not a financial company that I want to take a look at their earnings call, and that's JB Hunt.
Yeah.
It's a trucking company, and I want to see what kind of numbers they're saying. They usually pre what's the word I want to use? If they're
Pre-announce.
doing yeah, they if they report bad quarter, then usually the next quarter for retail companies is bad because they deliver to retail companies. That means they're doing less deliveries. Um,
Well,
on
freight's
when,
been bad for 4 years now.
huh?
I said freight's been pretty bad for, well, 3 years now. Just about three
Yeah,
years.
but JB
Three.
Hunt has had some good quarters during that time too.
Yeah.
So move ahead to Wednesday before the bell. We got Ally Financial, Citizens Financial, First Horizon Bank, Northern Trust Bank, Synchrony Financial, and U.S. Bank all coming out on Wednesday before the bell. I mean, this is a heavy bank week, a heavy bank week. After the bell on Wednesday, you have Bank OZK, Discover after the bell, Equifax, F&B Corp, Home Bank Shares, um, and Wintrust Financial. You also have one airline report this week that's United coming out on Wednesday. Uh, Continuing the theme of the point I'm trying to make here. On Thursday, you have Berkshire Hills Bank Corp. You have Commerce Bank Corp. You have Key Corp, M&T Bank, OFG Bank, Texas Capital also coming out. Netflix is coming out this week as well, so keep an eye on that. I'm sure we'll report on Netflix. After the bell on Thursday, you have Glacier Bank Corp, Western Alliance Bank Corp. On Friday, American Express, Comerica, Fifth Third Bank Corp, which they just recently went through a scandal where they had to pay out millions of dollars because they were forcing people to carry different extra insurance on their cars in order to keep their car loans. So they just paid out millions of dollars due to that scandal. Huntington Bank Shares, Regions Financial, and Travelers on Friday. So heavy banks. We're going to get a good look at the financial markets as a whole and kind of see where the banks are going with these higher rates. They should be making some more money, right? Yes, no.
Yeah, we talk a lot about Netflix, but Netflix isn't really like it's not it's not telling of the entire macroeconomic picture. The three that I'm most interested in, Travelers,
Yeah,
United, and then American Express.
right.
Yeah.
Well, another one I'm interested in that's reporting on Thursday before the bell, and that's Cintas. I want to get a look at where they're at, how they're doing, and the reason why is if you don't know the company Cintas, you may not. Cintas services companies and businesses. They do things like first aid, fire alarms, just random different things, service, toilet paper, paper towels, all kinds of uniforms, all kinds of things
Yeah.
for businesses. And so if they're reporting slower revenue, then that's a sign that businesses are trying to cut costs.
Yep.
And so that's one thing to look at because they're a strictly business only company. They deal with businesses, and that's a good sign of the economy as well. So them and JB Hunt gives me an idea of how the quarter is going to go. Are we going to hit GDP numbers? Are we not? If it's GDP is going to come in low, I know that ahead of time based off what some of these companies are painting a picture for me. They're pieces of a puzzle. And if I get a good look of maybe half the puzzle ahead of time, I could put together a good idea.
Right.
So Brandon, final thoughts, take us away.
We got a very big presence here in Cincinnati too, since Cintas does.
Well,
Very
that's
large
because they're from
presence.
here. The family owns them from here.
I,
Yep.
I figured. I didn't know 100%, but I figured. Um, Company culture is one of the most important things to look for. If you can, when you're buying a stock, I would recommend, and I think a lot of people probably don't do this, but look at Glassdoor and employee reviews on them as well.
Right. And chinchilla picking, they have 2 Glassdoor reviews and it's excellent. So come work with us.
Right.
We need someone who can IT because we can't IT. Final thoughts from me. I'm looking in this week. I'm watching Bitcoin rise up. That's going to help some of my other investments I have going on, like I've mentioned already on the show. I recently got out of my Tesla position. I made profit. A lot of other people got out of their Tesla positions due to the rise up. I think this rise up is short lived. I don't think it goes back down to 120. But I don't think it stays at 248 where it's at currently. And that's just because I don't believe they're going to actually hit the numbers they're saying they're going to hit in August as far as making every car a robotaxi. I think they're going to fall short of that, or they're going to have issues with that, and there's going to be bugs. And every headline that comes out in August is just going to shoot that stock down.
Right.
So I sold ahead of thinking that was coming in late July, early August. I took profit. I didn't sell for a loss. I made profit. But I believe that that's what's going to happen with Tesla. So I'm not buying it again until after all that news because I believe it's going to make the stock go down. Google is already dropping on the news of the buyout over the weekend, because I don't know if everybody's aware that's something that can happen is buyouts, but they are dropping. And then yeah, I'm just gonna be watching Coinbase, and the current as of right now, Bitcoin is currently trending up at $60,360 a coin. So that's going to continue to trend higher. Again, before the events of yesterday was at 57,000. So that's just a move due to events over the weekend, and I believe that's going to continue and be a ripple effect throughout. Cool. So as always, man, we hope we have been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.